Although Tesla is far ahead of the curve in terms of autonomous vehicles, all automobiles will eventually need to be able to drive themselves. Driving is more enjoyable, convenient, and safe. In order to do this, it is now widely acknowledged that the best method for training these models is to learn directly from video. In the past, we trained using manually annotated images, such as a road, a sign, or an automobile. It was amazing. Currently, we simply feed the automobile video and let it make sense of it on its own. Although this technology is quite similar to that of huge language models, the extremely high data rate of video data necessitates a massive training facility. In essence, the AI technique used to base massive language models to comprehend the realm of physics is the same method used to teach self-driving cars about physics and the physical world through videos. You did really read that title correctly. With its support of Tesla's self-driving technology, Nvidia has caused a stir in Silicon Valley and beyond. But we're talking about more than that. We'll also look at how Tesla is taking risks on the international scene alongside Chinese producers like CATL, and how the future of the electric vehicle market may be altered by recent US tariffs on Chinese EVs and batteries. You've come to the correct spot if you're curious about the potential effects of these changes on the market and what they mean for investors. For the most recent information on the Tesla and EV markets, remember to like and subscribe to Tesla Stock News *. Let's begin. Jensen Huang, the CEO of Nvidia, recently commended Tesla's progress in self-driving technology. He underlined that learning methods similar to human observation are used by Tesla's new AI model. This approach is a substantial departure from conventional AI learning procedures, which can entail a great deal of direct input and labeling, much like teaching a toddler the names of every object. Rather, Tesla's method simulates a real-world experience by letting the AI learn on its own by examining patterns and behaviors in massive amounts of video footage. However, self-driving cars are not the only aspect of this story. Huang also explored the wider uses of generative AI, which go well beyond the automobile sector. This kind of AI creates new concepts, designs, and solutions in a variety of domains in addition to processing information. For example, the business recursion is using generative AI to find new drugs. Furthermore, Wang explains that this technology might provide what he refers to as machine translation for the actual world by learning not only human languages, but also the languages of chemistry, physics, and even art. Imagine a world in which artificial intelligence, AI, not only drives automobiles but also creates life-saving medications, foresees natural disasters, and creates artwork that can compete with that of the greatest masters. According to Huang, Nvidia is leading the way in this new world because of its potent GPUs and innovative software. This breakthrough aims to propel the next wave of AI progress, rather than merely keeping up with existing technology. Multimodal learning, a development in AI learning, combines text, video, sensor data, and other elements to create a more comprehensive and rich learning environment. But such integration comes with a huge computing cost. It's like handling several complicated tasks at once. However, Nvidia is well positioned to manage these difficulties thanks to its strong technology infrastructure. Even while Tesla is currently at the forefront of autonomous driving, it is obvious that all automakers will eventually have to follow their AI-driven strategy to be competitive. Self-driving car convenience and safety are important, but so is adopting an AI-driven world where technology improves many facets of our lives, making them safer, simpler, and maybe even a little more fun. What can we learn from all of this, then? Nvidia is securely positioned at the center of this shift as artificial intelligence, AI, explodes in generative AI. The type reshaping the technological landscape rapidly evolves. Being at the forefront of AI development, Nvidia's advancements are essential for anybody interested in following the path our world is taking. Their emphasis on using video data to train AI is paving the way for a new era in which AI can solve complicated problems, produce surprising results, and inspire investors, tech enthusiasts, and the general public. At the same time, Chinese producers and Tesla, a major force in the electric vehicle industry, are making notable progress in their international growth. The massive Chinese battery manufacturer CATL is actively seeking global expansion and intends to build more factories outside than its current six. Given the growing competition in the local market, this growth is essential. Partnerships like the one with Ford to construct a battery plant in Michigan and possible joint ventures with Tesla for a facility in Nevada are examples of how CATL is working to replicate its achievements. Due to CATL's technology licensing agreements with around 10 OEMs, these partnerships highlight a substantial strategic move toward internationalization. This creative approach goes beyond the supply of technology. It offers all-encompassing assistance with the development and operation of plants. The goal is to accelerate global battery production expertise so that partners may quickly improve their operational capabilities and embrace cutting-edge technologies. This strategy is intended to enable CATL's partners to swiftly expand and satisfy the growing demand for cutting-edge battery solutions worldwide, guaranteeing their competitiveness in a market that is changing quickly. However, the voyage of Tesla doesn't end there. It's much more fascinating because every day is a new discovery with ups and downs. Tesla continues to attract more and more investors in this way. However, are you aware of anyone else who is as optimistic about Tesla? That would be Asterisk Seeking Alpha Asterisk, today's sponsor. There is more to Tesla's remarkable success than merely watching from the sidelines. With the most recent information on Tesla, stock price targets, innovation, and all things Elon Musk, Asterisk Seeking Alpha Asterisk is your one-stop shop for Tesla bulls and those with an eye for finding the next big thing in the stock market. Asterisk Seeking Alpha Asterisk is the best pro-Tesla news site on the internet, therefore avoid the mainstream media's anti-Tesla rhetoric. Our channel may receive a commission if a customer makes a purchase after clicking on the affiliate links in the description. I appreciate your help. It is clear that CATL is the market leader as the global battery market keeps growing and changing. The corporation claimed a significant 36.8% market share in 2023 after installing an astounding 259 gigawatt-hours of batteries. This noteworthy accomplishment highlights CATL's technological prowess and strategic expansion in a highly competitive market. However, impending U.S. tariffs on Chinese batteries and electric cars, as well as other essential imports including steel, aluminum, semiconductors, and lithium-ion batteries, are expected to change the scene. These tariffs are set to go into effect on August 1st and will impact items valued at about $18 billion. These tariffs have a wide range of effects. First and foremost, they are intended to shield American businesses from what is perceived as unfair competition from foreign producers, especially those in China. The U.S. government hopes to boost domestic production by enacting these tariffs, which could result in the creation of jobs and economic expansion in the nation. This action, nevertheless, can also result in higher prices for businesses and customers who depend on these imported goods. Examine an investment situation involving the battery and electric vehicle industries to see how it can affect your own finances. Let's say you choose to put $1,000 into a portfolio that has stock in businesses operating in these sectors. Companies like Tesla may have to pay more to obtain parts or materials if the tariffs raise the cost of producing EVs and batteries. Higher prices for electric cars and battery-related goods could be the result of these increased expenses being passed on to customers. As a result, buyers may put off buying new EVs or choose less expensive models, which could result in lower sales and ultimately a decline in these companies' stock market values. The value of your investment may decline if it consists of stocks of businesses that are highly dependent on imported goods that are impacted by the tariffs. For instance, your $1,000 investment may drop to $900 if the stock prices of these companies decline by 10% as a result of tight profit margins and lower sales. Furthermore, the uncertainty may further erode investor confidence and increase market volatility if the tariffs lead to a protracted trade battle. This situation might make losses worse. Thus, it's important for investors to think about the geopolitical risks involved in funding sectors that are impacted by global trade regulations. Knowing these dynamics makes it easier to decide where to put your investment money, particularly in a market that is global.